there are signs the labor market has started to turn. That was obviously before the third virus wave, so we'll have to remain and see how that affects things. But I think that the labor market has remained very tight, and even if we see some near-term jitters, there's the employment adjustment subsidies, so there's basically a wage subsidy that will probably prevent a big rise in unemployment as it did last year. And we also think that the impact of these latest measures will be relatively mild on the economy. So chances are that the unemployment rate will end this year lower than it ended last year. So we have it at about 2.7%, which would be very tight by historical standards and still consistent with reasonably strong wage growth. And wage growth has actually held up pretty well so far.
In Japan, does that translate to better domestic consumption then, if people got more to spend?
In theory, yes, but there's obviously other factors that are far more important. I mean, one thing is the huge stimulus. So we had the 100,000 yen stimulus payments that households received last year that are no longer being paid. So on the income side, things are getting actually worse now because that big support is no longer there. But then you have the savings rate obviously very high because people are not willing to spend or not allowed to spend because of the virus restrictions. So the outlook will be very much shaped by the virus restrictions rather than by developments on the income side.
We were speaking earlier with our Forex guest, Max Lin, who said that he sees limited upside in yen, and that perhaps over the course of this year we might see sort of dollar yen remaining largely in a range of 100 to 105. Does that sort of fit in with your forecast, or do you see something else for dollar yen on the cards this year?
Well, we have the dollar generally weakening across the board, largely because of we're foreseeing a continued surge in global stock markets. And in terms of the yen dollar specifically, I mean, we think that inflation in the US could actually surprise the upside of the next few months. There are signs of capacity shortages driven largely by the pandemic, whereas in Japan, inflation will remain very subdued. So we think that real interest rate differential will move further in favor of the yen, and that's why we have the yen strengthening to 100 against the dollar by the end of this year.